Tomorrow, 1st of July, which means price rises across the economy. The minimum wage will increase by 5.75%, while aged care workers will receive a 15% increase. Energy prices will rise across Australia, with Victoria faring the worst, with prices there up 25%. The superannuation guarantee will lift to 11%, and the indexation on HECS loans will jump 7.1%. So how will these price rises add to inflation? I caught up with economist Chris Richardson a little earlier.
It is a problem. Basically, inflation will start for a reason. We threw too much money at the economy during COVID, which was the safe mistake to make, but, it meant that money was there. But then you had the invasion of Ukraine, you had the floods along the east coast here in Australia, you had China's economy and its supply lines very thrown off by COVID. That combination started the inflationary engine. The risk is the new phase is we get inflation because we have inflation, because everybody starts to think, well, tomorrow's prices, tomorrow's wages are going to be higher. We need to get ahead of that. You are starting to see in many, many things prices head up, a range of government and related prices, for example, heading up as soon as tomorrow.
Yeah, millions of workers on the minimum wage will see their wages increase from July 1, and 15% pay rise as well for aged care workers. Just how large a contributor is wages to the whole inflation story?
It is an issue. And to be clear, there was always an excellent case for aged care workers to get a solid increase. There was an okay case for minimum wage workers, and to be clear, again, they deserved a very solid increase. The size of that increase, because it spreads beyond those on the minimum wage to a bunch of other people, clearly is a bit on the minds of the Reserve Bank. People tend to think that when low wage workers get a wage increase, that's great for the least well off. It's actually a little less clear than that. Workers are spread throughout family incomes as a distribution. Turns out that the lowest income families in Australia, by and large, don't have workers in them, because it's students or pensioners or the unemployed. So yes, it is a factor in ongoing wage inflation, but price inflation as well, and maybe has done a little less to protect the less well-off than you'd otherwise think.
The other thing is the superannuation guarantee changes, jumping to 11%. So is that going to add additional costs for businesses, which they'll obviously pass on to customers?
It absolutely does. There was always a risk that any further pressure on costs at a time when inflation is already running relatively high would flow through the economy. And that is, I guess, one of the factors to consider as that superannuation guarantee charge goes up. I felt all of this a little close to home this morning when I headed out for morning coffee. I should have taken the hint yesterday when I saw they were redoing the price board. So my coffee was up 14.2% in price this morning. And that's the challenge. Basically, you are seeing a range of things go up, partly now because of fears that everything else is going to go up. It is that inflationary psychology that central banks, like our own Reserve Bank, have been trying to fight. It's just turning out to be a tougher and hence more costly fight than earlier hoped.
Chris, one of the other things we've seen over the past month or so has been state budgets from all the states around Australia. Seems to be a theme of rising expenditure and ballooning debt. How much of a concern is this for the federal government, which may potentially need to bail out a state government over the next few years if things get really bad?
So the worsening during COVID was most notably in federal finances. More recently, there's been a worsening in state finances. In some cases, that's been a number of years in the bill. To be fair, though, although the states now have a bigger problem, or certainly Victoria, for example, has a bigger problem in many ways than the federal government does. No, we're not at risk of a bailout. And whether you're looking at individual states or the feds or the combination, it remains the case that in Australia, debt is substantially lower as a share of national income public debt than seen in most other nations.
I guess, though, with the interest rates on the way up, the cost of servicing that debt gets bigger. Talking of debt, RBA and rates, they meet next week. Are you expecting to see another cash rate rise here from the RBA?
50-50 call. Working against a rate rise is this month's data on inflation that we got a couple of days ago was pretty good. That will be holding the Reserve Bank back. On the other hand, the other news we've had in the past month since they've met is that jobs remain very strong in Australia, and retail spending, although it's now mostly powered by inflation, but it hasn't dropped as much as earlier thought. Or in other words, although we are seeing inflation fall, there are a range of signs that it remains pretty sticky. That will leave the Reserve Bank in two minds. I'm not sure which way they'll go next week. I would say, though, by the time another month rolls by, whether it's next week or next month, I am expecting another rise.
Economist Chris Richardson, great to talk to you today. Thanks very much.